Hi everyone, and welcome to this afternoon's webinar. Well, it is afternoon for us here in the UK. Before we start, we had I mentioned this morning for those of you who were with us. We've had there's been a problem with our normal fibre broadband. There's been some damage to it out in a field somewhere, and that's currently being repaired. So we are working off a little mobile unit that BT have kindly sent to us. It did actually hold up this morning, but it can be a little bit flaky. So if we do disappear, that's the reason why you won't be able to hear us or see us. Anyway, as I said, thank you for taking the time to come along and join us for this afternoon's sessions. There's all sorts of things happening on the markets at the moment, so it's nice to see some decent price action. But before we start, as always, may I just draw your attention to the disclaimer that I know you can see on the screen. As you know, trading can be a very risky business, so please, I urge you, please don't ever think of using money that you cannot afford to lose. As always, we are going to be looking at the charts through the prism of volume price analysis. This is the book where the methodology is explained. It's up on Amazon, hundreds of 5-star reviews, of which I'm so proud, honestly, of the book, but more proud of the fact that so many traders, the effect that it has had on their trading and investing, because this methodology is not, we showcase it in a trading context, but of course you can apply it for longer term. As I said, investing, you can use it on charts of days and weeks and months, as it were. So as I said, it really gives me a nice warm feeling that traders are out there and they're actually making sense of what is going on in terms of price action and using volume to basically establish where the market is going next, and whether it's it's an anomaly and they're being sucked into a position either as a trap, basically. So that's where you can find the book at Amazon, and there is a companion book which has over 200 worked examples of the methodology in all time frames. This one covers primarily stocks with indices and some commodities, and there is a version also for the Forex market. Right, let's just come down off that. There's actually been a really fantastic move on the YM. I'm going to be showing you that what I've been doing since this morning on the YM using my MT5 platform, but I believe you've got the same instrument on MT4, and what I've actually got here is a 5-chart combination using, as you can see here on the far left, a Renko chart with a time chart, and also these two charts up here, the 10-minute and the hour, and I've got the day for levels, because VPA, yes, it's price action, yes, it's certainly volume, and we can see here clearly what happens at when Wall Street opens. There's obviously a surge of volume, but volume price analysis is more than that. It's actually support and resistance. It's a hugely important part of the methodology, and we use the way we've incorporated that in VPA is something David and I have developed ourselves, and we've developed these very, very specialized indicators to help us, not only to help us get in, but more importantly to stay in, and also to know when to get out. Right, before I'm just going to talk through the chart, because this trade is actually ongoing at the moment. It actually goes back into Globex. Let's just quickly have a look. A couple of things I wanted to highlight. Where are we? Well, we can see here the futures are down at the moment. They're not heavily down, but they are pretty heavily down. Certainly, after yesterday, as you know, we had another bit of a manic Monday, not quite as manic as last week. This was on the Moderna vaccine. I think the two vaccines are very similar, I believe. I've just been reading about them. So we're now waiting for, is it AstraZeneca? The AstraZeneca version. There's all sorts of other companies, other pharma companies that are coming out with vaccines. So, which is good news. Clearly, if we can, we need to get ourselves out of this horrible situation that we all find ourselves in. Our lives have been, some lives have been completely destroyed by this wretched virus. So there we are. And looking at the Nasdaq now, the Nasdaq hasn't gone down quite so much. There's been a bit of divergence between the indices, in particular the S&P and Dow and the Nasdaq. And you may have read that it's to do with what they call a rotation. There's a rotation out of growth momentum stocks. The growth stocks are the stocks that have been driving the Nasdaq, ballistic as it were. The tech stocks, the Facebooks, the Googles, the Alphabet, and Apple. And there is now appears to be a rotation out of those stocks and into what they call value stocks. Value stocks are sometimes they're stocks that are undervalued because they haven't had a lot of attention from the market. There could be all sorts of reasons for that. Maybe they're in a sector which isn't particularly prominent at the moment. You do have to remember, the stocks go through an economic and business cycle. Of course, everything has been distorted because of QE, etc., but there does seem now to be a change, if you like, moving out of, as I said, the high-flying Nasdaq and tech stocks into these perhaps sometimes slightly more boring stocks. There's also another reason for that, and when an economy is on the way up and expanding, tech, first of all, it leads the way, and that's where all the money pours into. When money starts to move out of tech and perhaps into defensive stocks, as it were, what is that telling us? Well, maybe that is telling us that there's going to be, there is some serious trouble coming ahead. I think they say that the stock market is sort of forward looking by about 6 months, David, and it really depends on the ravages that the damage that this virus has done to our economies. At the moment, we can't really tell. We're still living through the worst of the lockdowns and what have you, but once everything has settled down, we will know the damage that is for the longer term damage, not only to health but to our economies as well. So what kind of maybe recession are we facing coming up, in the next, certainly at the beginning part of next year? So that could be a rotation as well. So tech, the Nasdaq, you see it as a sort of sentiment of where we think the economy is at the moment and where we think it is going in the future. And to give you so could be an indication of trouble ahead. And then, of course, you may have read today a couple of things. Tesla has now been added to the S&P 500. That's it's had its entry there. But the other thing I found interesting that I picked off Bloomberg, I think it was this morning, was that Warren Buffett, he's rotating out of banks and into pharmaceuticals, and that's quite interesting for another reason, because banks, I don't know how much of his holding he has sold, but if you think about it, this is also going to tell us a little bit about interest rates, because the banks only have one product, which is debt. And if interest rates are not going to rise and they're going to stay, depressed or even maybe negative interest rates, what does that tell us about the medium-term outlook for stocks? So that kind of backs up what is happening in this rotation. So just something to be aware of, because if you are day trading stocks, you will obviously have to make a selection based on, you may have a set of favorite stocks that you like to day trade on a daily basis, but suddenly, you know, it always pays to know your stocks, know your sectors, and what those sectors represent, how have they been performing. And you can go and have a look at FinViz, and you can see where there's been this change, where if you look at technology, this is a day, you know, compared to where it was maybe a year ago, technology was right at the top. So sectors, what they're doing, and you know, the various sectors where they are, that can also give you a lot of insight, particularly if you are looking for you know, stocks to trade on a daily basis. We're going to talk about stocks a lot more when we do TradeStation, which is the platform's going to be available in a couple of weeks' time, the indicators for the platform, and we're going to be doing sessions purely on day trading stocks, and probably going to be putting together a little program for you know, that part of the market, as I said, for day traders, mainly stocks, and possibly indices as well. One other thing to bear in mind, and that is the disruptive nature of someone like Amazon. Again, this is just you may have this I came across, actually came on my Twitter feed. These two stocks here, CVS and Walgreen Boots, you can see they've had a huge gap down, and that is because Amazon is going to now be delivering medicine to their prime customer base. I think it's just the US, and it's this kind of information that you know, if you are, as I said, if you are not only day trading but investing, so it's all very well saying I'm going to go into pharma, but what kind of which aspect of pharma? These are you know, these are companies which have huge networks for delivering medication to people, and certainly if Amazon are going to come in, then that's another that's a you know, a big disruptor to their business. I did read a little while ago that Bezos, he thought that the healthcare, certainly with what's happened in, you know, what's happening with the pandemic, is pretty much going to be center stage in the coming months and next year as well. So there we are, something to think about and to consider, and perhaps to you know, add to your knowledge. Right, to get down to what are we actually looking at the moment? Well, this is now my kind of default 5 chart setup. It's taken me a little bit of time to get it together. I'm always looking for something that I can put together which gives me all the information I need in terms of price action, what is the volume doing, and these all important levels. The levels, how we determine the significance of different levels on the different time frames. We use price-based, and we have specialist indicators for that as well, but we also use volume based on the volume point of control. And the way we put some hierarchy to these levels, which are more important than others, is we actually have an indicator based on Camarilla. It delivers 6 levels as opposed to 4, which is the more standard use of the protocol. And what it also does is it gives you daily levels on all the charts up to an hour. And the reason why I have the hourly chart is there's a number of reasons. First of all, it's a chart that I kind of benchmark what is going on in the faster time frames, but the values on the hourly chart change, are refreshed on a weekly basis. So they are actually valid for the whole week, as it were. And what happens is when you get a day like yesterday, where there was this big uprush with the Moderna, what it does sometimes, or certainly on a daily basis, those levels will be absolutely, you know, they'd be chewed through. So the daily then will come into play. And if you chew through the daily, you've always got the hour. So you use them in combination in multiple timeframes. Now, what I've actually put this here, this was the start of what is it? This was 60th. This was the start of the Wall Street Open from yesterday, because what is happening, what has certainly been happening on the indices, is you do get these big moves, well, certainly if you did last Monday, in Globex, which is a time when a lot of perhaps North American day traders up until recently have kind of discounted. But I think as day trading has become more and more popular, and also you can get some big moves, and then by the time Wall Street opens, it kind of, you know, it kind of pieces. It doesn't go very far, or it goes sideways. Now, the interesting thing about this price action, as I said, this is Moderna. This is the move higher in Asia. Asian markets were positive. They picked up the sentiment from Friday. You have this explosive volatility candle, as you can see here. Now, what happens with volatility candles when they're triggered? It means the price action is outside of the average true range. What it did was it triggered the volatility candle. In fact, it triggered a second one shortly afterwards. But what then tends to happen is the price action will retreat to within the spread of the candle, and it will either then reverse, or more commonly it will congest. But what is also interesting is the volatility candles of themselves give you key support and resistance levels. And if you notice here, they also coincide with a very important Camarilla level, which is the R3, and you've got the equivalent, which is the S3 at the bottom. And often these will also act as potential reversal points. And what you can see has happened, it is because it's a very widespread candle, it has traded within this range. It reversed, it's gone higher. This was before Wall Street Open. Then what happened? If you don't take account of what is happening in Globex, and you come along at the equivalent of 2:30 here in the UK, and you say, oh right, now I'm opening my terminal and I'm really kind of discounting what has happened in Globex, you will be at, I think, a considerable disadvantage. You should treat this as like the pre-market. If you were doing stocks, you wouldn't ignore the pre-market. So please don't ignore what is happening on Globex. Of course, you're always going to get a huge inrush of volume, as we can see here. But interestingly, what happened then yesterday? It kind of drifted higher. It hit all our key levels, as it were. Then it went, and notice it went to the S3. Has never gone down to the low of that volatility candle, and it's been tracking higher. And where are we again? At the S3. Now, what that's also coincided is, obviously it coincides with a very important level on the YM in it, which is 30,000. So anything, a big number like 30,000, as you can see here, is had various attempts to breach that level, and it hasn't. So we know the R3, the 30,000 level, is an important level for the remainder of this week. So that is what the hourly chart is telling us. Now, the reason I have the daily chart, the same values, as I said, the hourly right up to the daily. There is another set of values which is on the weekly chart, which are the values for the rest of the month. So the indicator, as I said, gives you this a broad spectrum of important levels. And the way you look at them is that when price reaches a confluence, so it reaches an important level maybe on the daily, and it reaches an important level maybe on the weekly, then it's going to have a tough time actually getting through. Now, the important thing about the daily chart is this. What kind of trading condition are we looking at? What kind of state is this chart in? Well, we can see here it's clearly been in a trend higher. You can see that there's been volatility in the trend. It's been a trend with volatility because we've had volatility candles triggered. We've got this sort of quite big doji candle here, a ton of volume underneath it. What happened? retrace into the spread of the candle, but there was a push higher. There was a little bit of a pause there, a very narrow spread candle, a lot of volume underneath it. What is that telling us? Well, with that kind of volume under that kind of candle, that is just a, it's a correction. If that was going to reverse from there, that candle should have been much wider based on that volume. So we're kind of going higher as we come to these key points. Apologies there, both my sound and my voice went down simultaneously, but we're back on board, and I hope you can all hear me now. All right, someone could tell me whether they can now hear me. Brilliant, thank you. Yes, it's as I said, it's one of these little glitches due to the internet. So we then had this huge volatility candle here, again with a wick to the top of the candle. Within again, we're back into the spread of the candle. Now on the daily chart, we're actually trading within the spread, albeit with a kind of bias to the upside. We've had a little bit of congestion, as we would expect. Then we had an attempt to break higher. The volume is sort of falling away. It's not, it's not massively convincing, as it were. And of course, yesterday, then we hit that all important 30,000, which is almost the top of this volatility candle here. So it kind of tells me that, I am broadly in a trend higher, but I'm now come to this important level. And what am I expecting today? Well, I have actually had a pullback, and that is the pullback on the faster time frames that I've actually been looking at from this morning. So here is my Renko chart. And I've marked up the 2 points. Here we are. Now, what the Renko chart does, it gives the price action, just the price action, really a beautiful geometry, in the sense that not only do you see the trend, either up or down, but you see those all important congestion phases, because that's where trends start. They either, a price moves higher, it then pauses, and it goes into a congestion, and it will then either reverse from there or it will carry on in the original direction. So if we take this point here, this is the 30,000 high, you can see here, this is the trend lower, but it doesn't go in a straight line. So once we establish that we are in, going lower rather than, simply pausing and then moving back higher, where are the points where you think there could be an entry point? Now, we have developed these particular indicators to give us a little bit of a help in this. We've got the trend dot, we've got the trend monitor here, and what they do is, once you have an agreement in color change on the trend dot and the monitor, and a break of these significant levels, as I said, the level I took was here, then you could say, do you know what, I think that is potentially a good point to enter. And what the Renko also does, when you then move into these congestion phases, we did have a fade into the in-between color. You can either ignore that, or you can say, do you know what, I've taken some points out of that point there, let me come out, I can always go in later. And in fact, it did carry on later to another level of congestion, and it broke lower again. And we had this stepping process that we have here. Now, we've had the open, and what do we see in progress now? We look as though potentially we are looking at a reversal. How that actually played out in the time charts is that, where are we? So say 29,831. Let's have a look. Just make sure I've marked it up. 29,828. We're pretty close here. Remember I said about the third level on the Camarilla, whereas it's S3 or R3, and this is exactly the point where that reversed from. As you can, it actually it came down, tested it, it didn't reverse. It did on this occasion break through, down to the S4. We also had the volume point of control. Now this is the usual nonsense that we have at the open. This is my 3-minute chart. You can use the 5-minute, the 4-minute, whatever chart. So let's just move that out of the way. Time chart you like to use. Let's have a look. Quickly move that out of the way. Oh, come on. No, not gonna cooperate. I'm gonna have to move the chart slightly. There we are. Right, now how this works on this is the 10-minute. This is purely to show me the levels. What are the levels that I'm looking at? Because the levels not only tell me where I'm likely to expect a pause or a breakout, but it also tells me what the target is likely to be. So at the moment in this reversal, you overlay that candle over that one, you get a sort of hammer candle. Well, the next upside level is the S4 at, where is it here? No, it's not going to come up. There we are. But that's where the target is. So levels you use in a multitude of different ways. Then we look at, well, how does that correspond with the on the hourly chart? Do we have a confluence there as well? And as I said, what the Dow wants to do, it wants to go try and have another run at 30,000, and it may do that today. The other reason why certainly we had a bit of a sell-off just before the open is because we had retail sales come in, and it wasn't a huge miss, but it was a bit of a miss. Another reason why maybe, you know, any recovery is going to be long, it's going to be painful, and it's certainly not going to be quick. So going back to my Renko chart, so that was the first entry, that was the second entry. It actually kept me in the Wall Street open. Normally, with Wall Street coming up, the open on Wall Street, the physical market, and you know, if you've got any profit, you think, you know what, it's really not worth it because anything can happen. This particular Renko brick is set at 5 points. The way this indicator works, you can either use the ATR function. That's the indicator will come up with the value, but sometimes that value can be quite, you know, it can be 10, 12 points. So you may think, you know what, that's a little bit too much for me. I want to come down to a smaller value, and then you can set that value yourself. And there are advantages and disadvantages for using both. I would say that if you are really a quick scalper and you're just looking for maybe a handful of points because, you know, charges, the commission isn't very much, then I would opt for having a smaller value brick. But if you are, you know, you perhaps want to maybe try and stay in a little bit longer, you just let the ATR run it for you. But if, you know, it's a judgment call. Sometimes the values, because of what has happened previously, if the market has been very sluggish, those values can be, I think, a little bit too big. So as I said, it's 4, 5 points, 6 points. It's really pretty much up to you. David uses this in a completely different way on the NinjaTrader platform. He uses the seconds chart, and I think we are now going to go over and have a look at how you could now look at this setup that is developing on the YM. As I said, we've obviously got a potential change of trend. We've got the candles to tell us where we've got, it looks like we've got a sort of the equivalent. When you overlay one candle or another on another, as we see here, you get certainly here, that is the equivalent of a hammer candle. What's also interesting, we've had a volatility candle on this, volatility trigger on this candle. So we know the price is going to retrace to within the spread of the candle, and we know where this is likely to be moving to because we've got the S4 up here, and it still won't come. There we are. Here it is, 29,682. The S4 and the S3. The S4 as well, you can get a bit of a pause, as we can see here, but at least it gives you something to aim for as well. Now on the 3-minute chart, this price is also going to run into the volume point of control, which is volume-based resistance. So maybe this is simply a pullback, and you know, the primary trend lower, which we're looking at based on what we see on the daily chart, is going to resume. I'm just going to take off all the Camarilla levels there because I don't really need them on that chart. Let's have a look. Here we are, and I'll just expand that up a bit. There we are. Yes, and we can see that. We can see that. I've changed the resolution on my screen, and it's gone a bit doolally, unfortunately. So there we are. So on the day, we are pretty much it is a bit of a down day, but as I said, you know, we are overall still in a bullish trend, albeit we are at this key 30,000. So, you know, will the buyers step in later? You know, the chart will tell you. Just having a quick look to see if there are any more what's coming up in terms of news. Well, we've got Powell. Certainly, this is 6 o'clock our time. That's certainly going to have an impact on the market. So clearly, we have to, you know, we have to be aware of that. We've also got Lael Brainard speaking, who could possibly be the new Treasury Secretary. We don't know. So that is certainly something to be aware of. You know, he's obviously the Fed chair. You think, well, I'm trading stocks, I'm trading indices. You still have, you know, the Fed is, they are still very, very important, and you really have to be aware of, you know, every time he speaks, the market can react quite violently. So that's what that's where we are at the moment. That's what we've got to look forward to. And in terms of whether you take this reversal that is going higher, really depends on how long you think you're going to stay in this market. I mean, there could be enough there for you to say, yeah, I think that's enough for me. Certainly, we've had our potential entry here based on the trend dots and the trend monitor. So once those are in agreement, yep, away you go to the upside. But be aware, you're going to hit the volume point of control at 29,669, and then you're going to run into the S4. But it could be enough for you. You maybe just be looking for 10, 15 points. It's really very much up to you. And as I said, where are we on the hourly? Yeah, well, we're some way away off from 30,000. Right, let's go and see what that looks like on David's chart on the using the NinjaTrader platform, where the indicators are slightly different.